What's up, everybody? Michael and Coco here doing some technical analysis on the financial markets. Today is Friday. The week has just came to a close, and I'm going to be bringing up some charts here, talking about the overall market and where I kind of see it going. We're going to cover some of the charts that I went over yesterday. There are some important things that I want to walk you through today, including this new chart that is here on the screen. So let's get into it. Welcome back to the channel. We are looking right now at the Nasdaq Composite Index. And for those that don't know what the Nasdaq Composite Index is, this is all the Nasdaq stocks kind of compiled into one. So not just the Nasdaq 100, this is the composite looking at multiple different stocks. And I'm bringing this up for a reason, to really kind of give you a understanding of what's going on behind the scenes here. This is scoping out on the monthly time frame, and it's important. So pay attention to this message. Where do I start? Okay, so where do I start here? This is interesting. First off, the Nasdaq Composite, it's comprised of 2,500 stocks, give or take some, but roughly 2,500 stocks that make up the composite index. And this thing has just been extremely bullish. I'm on the monthly time frame as stated. I'm looking back here, October 2011, just been kind of going a little up, little down, little up, but mainly the overall context is just extremely bullish, right? 50 period way above the 200 period, nice slope, looks really strong. So why am I bringing this up? Well, first off, look where the 200 period moving average is. This is the 200 period on the monthly time frame. All right, and we're going to go into the weekly and the daily here too, because it's important. The price is at $10,853. The 200 period moving average is at 4,063. That means that the composite index is over 50% above the 200 period moving average. That, in historic terms, is just a very, very large overextension in this index. And that's a large overextension in any one stock, any index, anything that you look at. If the price action is 50% above the 200 period moving average, something's going on there. We've either had some sort of parabolic move, which we did, and it's likely to see some sort of retracement at some point. And there's other indicators that can help us determine that. But we're over 50% above, okay, the 200 period moving average on the Nasdaq Composite. We are down almost 8% so far in the month of September. So we're not even a third of the way through. Or sorry, we're basically a third of we are a third of the way through, but we're not even halfway through. And we're 8% down. Now, this doesn't mean that we can't continue up, but you need to just look at the chart. We're super overextended, right? Super overextended, and we're already down 8% in the first 11 days of the month. And look at the candle that's forming right here. Now, this is on the monthly time frame, as I already previously stated. And so we have a lot of time left. But look where the candle is right now. It already broke to a new lower low. And the real red body is darn near engulfing the entire previous month. So not only do we trade higher, but then we also traded lower. Just a full engulfing body over the previous month. If we close below there, that's what's known as a Western outside trading month here, which is a big type of reversal candle pattern. And we're moving in to election year, right? This is election year. Coming to the end of September. What comes next? It's October. Nothing new here. And October is historically a bad trading month, especially on election years. And if we get a close like this, or even lower, I mean, it's just setting up for something just nasty to take place. Doesn't mean something nasty will happen, but you need to be aware of this. I mean, people right now are probably living in la-la lands, just watching their portfolios go up and up. They're going to get used to these 10% returns every single week. But then when you really take a look at the picture of what's going on, you tell me, like, that's scary. That is scary. This parabolic move, all this hype, all this greed. What do you think takes place shortly after? You typically see some pretty aggressive pullbacks. And to bring the entire composite index down 8% in not even 11 full trading days, but 11 days into the month is quite an aggressive move. But that's not all I want to talk about. Okay, yes, we're overextended by the 200 period moving average. And yes, we know the FANG stocks or the FANGMAN stocks are these tech stocks in the Nasdaq are really bringing us up. But to what extent? Well, I brought in a new indicator. Okay, it's called the NAA200R. You can add this in to your charts as well. I'm going to actually have the link of this chart in the description, just like I had in the previous video. And we just clicked down to 49.79, but you're probably wondering, 49.79, but what does that even mean? And what is the NAA200R? Well, the NAA200R is looking at the overall Nasdaq composite, and it is taking it into a percentage point of the amount of stocks in the composite that are trading above the 200 period moving average. Now, the 200 period moving average is the godfather moving average. That is a well looked at moving average by many traders, by many investors. It's that godfather moving average that everyone has their eye on. It helps determine context. And what this is telling me is that 49.79% of the stocks in the Nasdaq composite, so less than half, right? Less than 25 or less than half of the 2,500 stocks that make up the composite are trading above the 200 period moving average. That means over half the stocks are not trading above the 200 period moving average. What does that tell you about the market sentiment? Think about it. It couldn't flash a bigger red warning sign to me. We have over half the stocks trading below the 200 period moving average, but the current composite is trading 50% above the Nasdaq Composite 200 period moving average here on the monthly time frame. And then it's setting up this reversal pattern. It got overextended or overbought on the RSI and kind of came down a little bit. This just goes to show you that the Nasdaq Composite right now is clearly, it's clearly in bubble territory. This can and will, in my personal opinion, head lower. No way that it can continue on this path to move higher from its current point where it's at. Within this month, maybe it comes up and down, but this right here looks like it is getting set up for an aggressive type movement to the downside. And right when I pull up the fib levels at 10,000, right? 10,000 right here looks like that level that we can come back to here in the very near future. If it goes lower, we'd have to look at it on the monthly time frame and kind of see where we're going. But 10,000 looks like we can easily get there on this index. Let's look at the weekly time frame. So here's the weekly time frame. As you can see, these candles right here, I think we went over this already in previous videos. That right there was an outside trading week and just a full engulfing. And that right there is a reversal type pattern, and we saw follow through. This week, we're down 4%. In a single week, we're down 4% in the Nasdaq Composite Index. It's pretty aggressive move to the downside. The bulls did step up today, and the bulls stepped up, and we did come back into this 11,250 range here, but we got rejected. As you can see, it stopped right here and then came back for support, and then right here. So it came up all the way and then got rejected. This right here, on a pullback though, these type of candles, they in theory can be reversal type candles because it's showing intra-week that the bulls really did have some momentum to the upside. We did make a lower low, which is bearish. We're overall in bullish context. The RS or the MACD right down here, you can see taking a steep decline way above the zero marker. But if we start crossing over this, that's a negative thing too as well. Let's look at the daily time frame of the Nasdaq Composite Index. So here is the Nasdaq Composite Index on the daily time frame. We're pretty far above the 200 period moving average. Now, This right here, this indicator is for the 200 period on the daily. Now I showed you the monthly, how far extended we were, but on the daily, we're not nearly 50% overextended. We were very overextended from, down here around just over 9,000 to a high of 12,000. So that's a pretty far overextension. But right now we're sitting at basically the 50 period moving average. We just closed below it, made a new low for the day. And the 200 period moving average down here is at 94.19. And the price is basically $1,000 above that. So still fairly overextended, not nearly as much as we once were, but this right here to me looks like it can still go lower. Now on the monthly time frame, it's extremely exaggerated, and what we need to pay attention to is where the month closes off, but we still have a lot of time left in it. Overall, when you look here, that 49%, so less than half of the stocks are trading above the 200 period moving average, but we're still pretty far above the 200 period moving average on this index. It tells me that we can head lower. Okay, that's what I wanted to get out, basically around the Nasdaq Composite Index. And another thing that I want to point out is the lack of the amount of put options that there are. And I can show you that by the CPC chart that we've been talking about. So here is the CPC chart. And we were discussing that if it crossed above 0.8, it's a sell signal. Not when it crosses below, but when it crosses back above, it is a sell signal. And in theory, right here, this is still, the overall market sentiment is bullish. And why is that? Well, it's above 1, or sorry, it's below 1. So when the CPC is above 1, that states that there's more bearish type of bias. And this is a contrarian indicator. So when people are extremely bearish, like they were right here at 1.3, you can use it as a contrarian indicator to tell you, hey, this is probably the time to go long. And clearly at 1.3, and then we started moving up, so it was the perfect timing. And what we're seeing here when we cross above it, and you look back in the previous times that it crosses above it, you see these little dips. It's not like, it doesn't mean an entire crash like it did right here. So it did do that, but it's unrealistic to think that it's just going to crash. Okay, this right here is a sell signal, and it doesn't mean we're going to crash. I want people to understand that that's not what this means. Can it happen? Duh. Yes, of course it can happen, but it can also, the price can keep going up. What it means is, from a trading and investing perspective, you need to look at what you own, and you need to make sure that you move your stop losses up, or you start hedging your current positions. And if you don't know how to hedge using advanced options, if you don't know how to do straddles, or if you don't know how to do covered calls or married puts, or whatever the case is, whatever advanced option strategy that fits you, then don't do it, because it's too late to learn at this particular point in time to make an aggressive move like that. So my advice would be, if you don't know advanced option strategies, start learning them and starting on a very small scale, not with an entire portfolio, because if you mess up, you can easily get burned. However, if you do know how to hedge, that would be the signal to hedge, or start, taking profits at the minimum. Take profits from what's going on right here. We crossed over it just yesterday, but barely. I posted an image on our Twitter account. It was at 0.81, and the indicator right here is saying when it goes above 0.8. So we were just above it, and that's when I notified everybody. Now we're clearly above it. So we're seeing this spike in action take place, but it's still below 1, which means the overall market sentiment is still bullish. But we're moving pretty aggressively to the upside. So if you look at the SPX down here, we have this green dashed line. This is support on the SPX. Look where this resistance is. So we have support and we've got resistance. We'll go into the SPX here in a moment. But it looks like it's kind of just hanging on right now until it wants to drop down to a lower point. So we're going to have to monitor this one too. We get a sell signal. I'm talking about the Nasdaq Composite and everything that's going on there. There's just a lot of things going on. So the Nasdaq Composite, it's very, very high. We're seeing some pullback take place. The overall market sentiment is saying, hey, we're more bullish bias than we are bearish bias, so we have a lack of puts. This is complete contrarian indicator, as already previously stated. And today's episode, by the way, is a little bit different. I'm just kind of ranting on and just letting you know my thoughts, okay? I hate being so specific and this and that and so technical, doing technical analysis, But you got to understand my thought process, because maybe if you understand my thought process, you might be able to start thinking a little bit like me, and you listen to somebody else that has other great insight, and you can start thinking like them, and you can start looking at both sides of the equation. I like to look at bullish things and bearish things, like I stated many times. You know, Robert Kiyosaki says a coin has three sides. It has heads, tails, and the edge. The best place to stand is on the edge, so you can pay attention to both sides. And I just don't personally see things right now bullish, other than the Fed and the plunge protection team, right? Who knows what they're capable of doing? For all we know, they could pump this market up, as I previously stated, to, you know, the Nasdaq 50,000 or the Dow Jones 40,000, whatever the case may be. But, you know, even if they did that, you got to understand, like, are you going to be wealthier, or is everything around you going to just cost significantly more? Whatever, I'm ranting. Let me go ahead and bring up another chart. Here's the SPX on the weekly time frame. So this week, we closed down 2.5% lower. Made a new low. Closed below this trend line that I want everyone to watch. And we closed below the 5 EMA. And the 5 EMA is one of those exponential moving averages that connects very frequently. And sometimes when we get a close either above it or below it, it stays above it or below it for quite some period of time. As you can see, when we don't get closes above it, we see these run-ups, and then when you see it go down, we can see some really downwards pressure and momentum as well. We got the MACD down here, kind of curling itself over, still way above zero. A lot of support, okay? There's a lot of support down here, but the market is telling me that it wants to head down lower at this particular point in time. So we're very bullish bias, which is a contrarian indicator, meaning that, you know, we could be getting more bearish here. So we need to look at areas of support, because this could very well still be a buy the dip, sell the rip type of market. And the major area of support that I've been keeping an eye on, I'll bring up the daily time frame to show you. The main area of support that I'm really keeping an eye on is down here at around 3,000 to 3,100. This zone right here. It's right now sitting on the daily time frame, this hammer candle. It's sitting at this green level of support. Okay, that's a dashed line from right here, this March bounce, to this June resistance. We broke above it, right? Acted as resistance, broke above. Now it's acting as support. And it's right next to the 50-period moving average, still below the 5-period moving average, have some overhead resistance. We're going into an interesting week, right? On Tuesday, I think it is OPEX. And then we have the Fed talking. Who knows what they're going to say? Probably something to do with more money printing, or using all the tools necessary to make sure nothing bad happens. And then we have the fib level down here. So still a lot of support. So if this holds up, and as stated previously, sometimes we see run-ups in the end of September, if you look at a seasonality chart, and we have OPEX, which is typically bullish. Doesn't mean it's going to be, but we might bounce from this point. But then we're going to run into this resistance, and then we're going to run into October. So what can very well happen is we bounce from these levels right here, head up, and then either crash, break down to this 3,000 range, and then we find our legs, or we continue moving down into this 3,000 range with some up and down sideways movement, and then bouncing from that point. I don't see it just crashing, breaking down through 3,000 in a heartbeat. It's possible, but I just don't see it happening, especially with what is going on in the economy. I still think people are going to be buying those dips. The VIX, I forgot to talk about yesterday, and what we got going on here, and for some, I forgot, it's in log scale. I don't typically look at it in log scale, but I've been showing you without log scale, so I'm just going to continue showing it just now, and then I'll get it fixed later. We had a falling wedge, we broke out. We had another falling wedge, which we were monitoring previous to this, and then we broke out. Our target was around 40 to 45, so just basically the high of this previous breakout. And now what we see going on is we see the VIX moving down. Now, yeah, the S&P 500, it was pretty weird today, and I'll bring up the 30-minute time frame. We did finish up a few bucks, but the VIX, finished down pretty significantly today, down 9.5%. Closed below the 200-period moving average on it, and now it's forming this kind of another falling wedge, maybe even potentially a flag right here. So we had this gap that we have to monitor. 18.1 would be the area to fill that gap. Maybe we get down there, maybe we don't. Not too sure. But ultimately, I do think that the VIX is going to be starting to pick up in volatility here in the near future. Given the context of the chart, it looks like it definitely may start pumping up. And to see it down this much, and then the S&P 500 was down about this much. I mean, not 9%, but it was down today for the majority of the day. But the bulls did rally back within the last hour and a half of trading. It's a good thing for the bulls because they were coming into a massive area of support that if they closed below it, that would have been even more bad news for the bulls. Let me bring up the 30-minute time frame here so I can walk you through that. So here's the 30-minute time frame, and if you don't follow me on Instagram, I actually I'm kind of irritated because I posted it on my stories, this trade plan, and I was kind of just joking around with it. And I should have probably just been paying attention to it and made the trade myself. And basically what was taking place, I was looking at it on the 15-minute time frame, but it was breaking down for the most part. Just go to my stories actually today and watch it if you haven't done it, so I don't need to walk through it again and save the people that already did watch it. But really what it was, it looked like it was flushing down. We're bouncing from a certain point, and then it started flushing and converted to a red candle, and then we saw that crash below 3,330. 3,330, we got below it, but then 3,310 held up as support. So these are the levels, and you could pull this chart up in the description if you want to see it for yourself. These are 3 resistance levels that we're going to be looking at going into next week, and these are 2 support levels that are very important for the bulls to keep above. If they don't keep above these levels, that will give me, all the more confidence that the market will continue to head down. Because overall, this time frame on the 30-minute, it's bearish. Right, we are sloping down. We're failing to bounce. We had this little head and shoulders, broke the neckline, but then we bounced. The bulls ended up, in the last 2 hours of trading, pushed it back up. And we really just closed 0.05% up. So $1.78. We basically just went sideways all day. Not much action there. The MACD still below 0, but it did just cross over. That might help give confidence to some bulls, potentially, maybe. As far as trading this, going into next week, watch my Instagram stories and see if I post anything there, or maybe I'll post something intraday, because at this particular point in time, I got to see where the market opens up. There might be some interesting news that comes up these next couple of days. So it's very hard to plot this or plan a trade plan out at this particular moment without coming in or understanding where the future market is going to basically open up at. Here is the NYSE McClellan Oscillator, the NYMO, still negative breath, printing minus 47.09. Market wants to keep moving up, keeps wanting to move up, but it wants to do so with just a few stocks. And this minus 70 level right here, if we start moving below that, that's going to bring the market down with it. I still kind of feel like we can bounce above this 0 line, and then that would just be a good area to start probably then putting on some short positions. Because at this particular point in time, it's either way. We're kind of just sitting in a weird spot with the S&P 500. We're basically, forming this kind of overall bear flag, here on the line chart. And we're just laying down on this support kind of, it's like a cliff, okay? It's just like we're walking this plank like this, and we're looking over the edge. Should we jump or should we not jump? I don't know. Is there water down there, or are we going to bounce, or should we just, maybe move up higher? That's kind of what it looks like to me. I don't know. Here's gold. Nothing's going on with the commodities right now, okay? Gold is consolidating. We're going to have more to talk about with gold and silver when we start breaking out of the consolidation. Just recently, we bounced on the top portion of this trend line. Now we're forming a little bit of a red hammer candle here, or inverted hammer candle. The 50 period sloped into this, so that's a good sign for gold, because this 50 period can act as a level of support. We have the 200 period moving up. It's at 1700. So the overall context is just getting more and more bullish here as time progresses when the price action is above these big moving averages. If we break below this, my target area is about 1815 to 1820. I want to buy more, but I don't want to buy more in this consolidation area. I'll either buy some on the breakout or I'll buy some on a dip. That's how I'm looking at it. Silver, same thing. It's, like I stated, consolidating. I don't want to buy it right now because I don't know if it's going to break to the downside or break to the upside. But it's in bullish context. The 200 period moving average, this is nice. It's sloping in to the main breakout level. Now, what I would like to see as a bull, okay, I'm bullish the precious metals. what I personally would like to see is for silver to break down through this and come retest the 200 period moving average. If it does that, you can just bet your bottom dollar that I'll be buying in right here if it can retest these levels, if it can get down there. The 50 period, it's not within this consolidation, but it is moving up pretty quickly right there, so it very well might reach. I'm not a buyer here. Once again, I'll either buy potentially on a breakout a little bit more, or I will wait for a breakdown, maybe pick some up at the 50 period, and if we get a little bit lower, I might pick a little bit more. But I'll probably pull up the FibNet levels on another video to kind of walk you through my thought process on all of that. I'm going to bring up the dollar chart now. Here is the dollar, the US dollar index, and just not doing anything, all right? It's not doing anything. It's in bearish context. We had the crossover, the death cross, right? The 50 coming down, 200 is far above it. Don't expect the dollar to do anything if we can't get above the 94 level. If we can't get a nice close above 94, I'm not convinced that this is a real breakout of this channel. I feel like this could be potentially just a false move. But what I would guess is if we start seeing the dollar break, and actually this is a basing pattern and we do start seeing it move up, I would imagine that gold and silver would break down. Now there's plenty of analysts out there that say dollar is going to be moving up with the price of gold, and that is a big possibility. But I don't know how that works and interpretates in the shorter time frame. Maybe in the overall context, when you really scope out, that will be the case, and that is what happens. But the dollar right now, it's just trending on this side. It did break down below it, but came back up, acted as support. Same with today's trading candle, same exact thing. Another hammer candle, it's holding. This trend line is holding. So if we crack below 93 and close below it, I think we're heading lower. Potentially even a close below 92 handle, which would be scary for the dollar. But I'm looking at 92 and 94, so that range. A break above 94, I'm thinking pretty bullish. Break below 92, yeah, I'm going to continue my bearish view on the dollar. Bitcoin on the daily time frame, we're just monitoring this bear flag, okay? Overall, like I said, the context of the chart here on the daily time frame where we're looking, it's bullish. We have the 50 period above, the 200, nice spread between the two. Price action is below the 50 period. That's bearish because the longer the price is below the 50 period, that means the more can slope and start turning over like so. So watch for this. If we get a break above this, yeah, we might either one, see a false breakout, or two, that might be the confirmation that we need to potentially start moving a little bit higher on the price of Bitcoin. But it's still within this channel, so we very well may just get rejected and try once again at this level at 10,000. If we get a daily close below 10,000, 9,500 was a level of support I mapped out, and then also we have the 200 period that will probably act as a nice level of support too. That's at 91.30. This is the 10-year bond. Pretty gnarly week for the 10-year bond, down 7%. Bullish divergences taking place. We did break out of this lower trend line, so that is acting as support. Like I said previously, my short-term look on this is that we can see it go higher, but my long-term view is I think that we're going to have these rates, just these yields, just constantly just compressed. The real negative rates here, and I don't know if this can go to negative by any chance, but who knows? Oil went, negative in the futures market, and the same thing might actually happen with our yields. But I guess we just have to wait to see. Like I said, I still think that we can hit around 9 to 1, especially on this break, and then we had the bullish divergences. But overall, just getting hammered, right? 50 period, above it, above the price action, which is going to continue to bring them down and slope them down. We have the 200, overextended, very far overextension, starting to slope down. We had the death cross previously there in October. So just overall, this could be potentially basing out, or we might just be trending sideways for a potential move lower. That's all I have for you guys on today's market brief. Hope that helps out. If you guys have questions, leave them in the comment section below. Changed up the style a little bit today. No big D, right? Everyone have a very good weekend. I'm going to be posting the weekly scan tomorrow. Going to be looking at the stocks. We're going to be going over the stocks that I picked too as well. So keep an eye out for that. Had a good week, Can't wait to tell you about it. See you later.